Thank you for tuning in. Dividend Dashboard here, and welcome to the September portfolio update. You heard that right, September. At the start of the month, I went on a trip with friends to Japan. When I got back towards the end of September, I was ready to work on the portfolio update, but unfortunately, I got really sick. Between recovering, adjusting back to my local time zone, which is a 13-hour difference from Japan, and returning to work, the update got delayed. Still, I decided to make this video for record-keeping purposes. In this video, I will be covering the usual: stocks I bought, dividends received, dividends year over year, portfolio value, all my holdings, and much more. So if you like this type of content, consider subscribing. It helps the channel be exposed to like-minded investors. With no additional fluff, let's dive in. For September, I ended up buying 6 companies, continuing to build positions in some of my long-term favorites. I picked 0.19 shares of Microsoft, 0.86 shares of Google, 0.39 shares of Texas Instrument, 0.44 shares of Automatic Data Processing, 1.12 shares of Kroger, and 0.15 shares of S&P Global. Now, I know those numbers sound small, but that's the beauty of consistent investing. Even partial shares add up over time, especially when you're staying disciplined and dollar cost averaging every month. These buys weren't random. They all fit into my strategy of focusing on high-quality dividend growth companies that I plan to hold for the long run. Each of these names has a strong track record of dividend reliability except for Google, solid fundamentals, and steady long-term growth. In September, 11 companies pay me a dividend, and honestly, that's one of the most exciting parts of the month for me. There's just something really satisfying about seeing that passive income comes in. It's like a quiet reminder that the plan is working, even when I'm not actively doing anything other than just buying stocks. The 11 companies are S&P Global, $2.91, Kroger, $6.12, Realty Income, $5.90, Visa, $3.13, Waste Management, $3.43, Home Depot, $4.63, Hershey's, $20.76, Pepsi, $9.89, Microsoft, $2.28, Google, $2.65, and Johnson & Johnson, $9.77, for a total amount of $71.50 received for the month of September. Even though the total payout isn't massive right now, I reinvest every single dividend back into the portfolio. I like to think of each payment as a small building block toward financial freedom. Every month, those small deposits compound, and over time, the snowball effect starts to take off. It's also motivating to see the number of companies paying me continue to grow. A year ago, I wasn't collecting dividends from nearly this many names. Watching that progress and knowing it's all from being consistent is what keeps me going. This is why I invest: slow, steady growth that builds real momentum over time. Looking back at my September dividends year over year, it's crazy to see how far things have come. When I first started, the amount I earned was barely noticeable, just a few dollars here and there. But over time, those small payments started to grow little by little year after year. Each September, the number kept climbing. The increases were massive, but they were consistent, and that consistency is what really matters. It shows that the strategy works. Reinvesting dividends, staying disciplined, and continuing to add to quality companies truly pays off over time. What is most rewarding is seeing the progress compound every year. I look back and realize that the income I'm earning now is thanks to the decision I made years ago. That's the power of patience and long-term investing. It's motivating to see that the snowball keeps rolling, and it makes me even more excited to see where things will be in a few years from now. If I just keep doing the same thing, stay consistent, stay invested, and let time do its thing. Moving forward, I have a portfolio valued at almost $31,000 with $162 in buying power, a weighted dividend yield of 2.30%, which translates to $589 in projected annual dividends. The portfolio remains at 21 holdings. Year to date, my portfolio is up 11.17%, while the S&P 500 is sitting at around 13%. So yeah, I'm trailing the market a bit, but honestly, I'm completely fine with that. Several portfolio updates back, I was beating the market by a few percent. What will really count will be at the end of the year. However, my main focus isn't to beat the S&P 500 every single year. But if I do, that means my portfolio will compound faster. My main focus is to build a portfolio that grows steadily, pays me consistent dividends, and gives me peace of mind no matter what the market is doing. I rather own companies that I believe in the long term, the kind that keep paying and growing their dividends, than chase short-term performance. Plus, considering everything that has happened this year, I'm really happy with how stable the portfolio has been. Some positions have pulled back, Others have pushed higher, but overall, it's been solid growth with income that continues to increase. At the end of the day, 11% growth while collecting dividends from high-quality businesses is exactly what I'm aiming for. Slow, steady, and sustainable progress. Looking at my 21 holdings, I feel really confident about the mix I've built. It's a combination of strong, reliable companies that pay consistent dividends and growth-oriented businesses that have the potential to keep increasing over time. Going clockwise, we have Apple, Colgate, Realty Income, Procter & Gamble, Waste Management, Kroger, Starbucks, JP Morgan Chase, Home Depot, Johnson & Johnson, Nike, AbbVie, Texas Instrument, Hershey's, Pepsi, Visa, Automatic Data Processing, MasterCard, Google, Microsoft, and S&P Global. I got exposure across multiple sectors, which helps me balance risk while still allowing for growth. Some of my positions are more stable, providing steady income even when the market moves around, while others bring higher growth potential that can really accelerate the portfolio over the long term. Now, do keep in mind that I am not a perfect investor, and I can make mistakes as well. I've been eyeing one or two holdings that are not keeping up in par with my investing thesis. I'm not a person to cut right away. I am more of doing a deep dive of the problem the company is going through to determine if it's temporary or is it worth the risk holding. Overall, this mix gives me peace of mind. I know that even in markets ups and downs, I'm holding companies that are leaders in their field, financially strong and positioned to keep rewarding shareholders for years to come. One of the most rewarding parts of building this portfolio is seeing the dividends roll every single year. The companies I hold provide a mix of steady, reliable income along with some higher yielding positions that really make an impact on my cash flow. What's great is the balance. I have some holdings that pay smaller but consistent dividends, giving me a dependable foundation, and others that contribute larger payments, which helps accelerate my reinvestment strategy and portfolio growth. Every dividend, no matter the size, adds to the momentum and reinforces the power of compounding over time. Seeing this income accumulate year after year is a huge motivator. It reminds me that each investment decision, each dollar added to the portfolio, and each dividend reinvestment is building a stronger, more resilient portfolio. Over time, these payments are going to grow, both because of the companies themselves and because of the reinvestment strategy I follow, creating a snowball effect that gets bigger every year. It's one thing to see the portfolio value increase on paper, but it's another thing entirely to see actual cash coming in. That's the kind of progress that makes me excited to keep investing and keep building towards long-term financial freedom. Looking at my total return, it's really interesting to see how different parts of the portfolio have performed. Some holdings have really outperformed, deliver strong gains, and boosting the overall portfolio, while others have had more modest growth or even slight pullbacks. I learned that this kind of mixed performance is completely normal. No portfolio is going to have every single position moving in the same direction. The key is that the overall trend is positive, and the winners help offset any underperformers, keeping the long-term trajectory upward. It's also a reminder of why I focus on quality companies with strong fundamentals. Even if some positions dip in the short term, I know that over time, these are the businesses that can continue to grow, pay dividends, and compound wealth. That will be it for the portfolio update. Again, my apologies for the delayed video, but if you made it till this part and enjoyed the update, all I ask you is to like and subscribe if you haven't. The support really means a lot. Thanks for watching, and I'll see you in the next one.